Good morning friends and welcome to the pre-market view. Friends, US markets were soft, they were down about 0.4% as some of the data points were not positive, particularly the retail sales actually came down for the third straight month to about 0.5%. Also some of the earnings which have come out from US have not been that great, so which is reflected in the way the markets are behaving. And though some people are expecting that you might see a bit of a quantitative easing, but the opinion is divided and there's not much of clarity about the timing of that. European markets were also flat, no real major action or news flow. But when we look at the Asian markets today, most of them are up anywhere from 0.5% to almost 1.5%. Hang Seng is up almost 1.5%. Whereas there is some pressure in the Japanese markets because the yen has actually strengthened quite a bit against the dollar. When we look at the flows, friends, the same scenario, there is a net buying by the FIs in the cash market of 257 crore and the domestic institutions were sellers to the tune of 40.5 crore. Also friends, one concerning point for our market is the fact that the Brent crude has actually shot up to almost 103.5. As we all know, it had actually came down to almost about $95–96, and since then it has really spiked up, which is a matter of concern. On that note, let us talk to Shaival for F&O Qs and the outlook. Hi Shaival, good morning.
Good morning.
The market continues to languish, and we saw that 5200, which was proving to be an important support zone, market just touched there and closed there. But looking at the SGX and the Qs from the Asian markets, we might gap up about 35–40 points. But please take us through your important observations on the F&O markets and what could be the outlook going forward.
Probably Indian markets have underperformed its peer in yesterday's trade, maybe because of the domestic concerns. In yesterday's trade, what we have seen is that Indian markets have closed near the levels of around 5,200, which we feel is an important level to watch on, because there are 2 to 3 reasons. First of all, we have seen when the Indian market have seen an spike, the Nifty has seen a gap up opening. It was at near the level of around 5,200, so that remains a crucial level. Also, 5,200 levels in the previous series was acting as an hurdle, and once we were able to surpass that, then we have seen that Nifty rallied about 5,400. So that level remains a very important level to watch on closing basis. Inflation numbers came in yesterday above market expectation, but were able to lure the investors' confidence, and because of which we have seen that short positions were being accumulated in the market in yesterday's trade. Even that can be observed from the FIs activity. The FIs were net sellers about 900 odd crores in the futures and options segment. Now talking about the implied volatility, there's lots of uncertainty in the market as the implied volatility has been rising, but there's not a major uptick or major change in the implied volatility. So what we feel is that the market would continue to remain uncertain ahead of domestic issues such as the monsoons are one of the concerns which market is keeping track on, and also on 31st we are having an RBI policy, so the consensus are divided on those, so market would continue to remain uncertain. Now 5,000 put option has seen a good activity, or we can say that it is standing with highest number of shares in open interest, whereas on the call side 5,300 call option is standing with a good amount of open interest. The weekly VWAP is at 5,300. So if 5,300 on higher side is taken off, then probably we can see market heading on the higher side. But 5,200 levels a crucial level to watch on. The bias for the week is negative.
Right. Also, if you could take us through certain important ideas and strategies that we could do in the current scenario.
See, from intraday basis, we have identified 2 stocks, whereas from positional basis, we have identified 1 stock. On intraday basis, one can go short on Exide Industry with resistance of 138 rupees 30 paisa. Ashok Leyland is also looking weak, so one can have a shorting opportunity on that with resistance of 2460. And on positional basis, we have initiated Tata Motors put option 220 rupees option with stop loss of 1 rupees and target of 4 to 7 rupees. If one finds an opportunity, say around 2 rupees 50 paisa, 2 rupees 30 paisa, one can buy this with target of 4 and 7. This call would be probably from 3 to 4 days.
Also friends, just an update on Tata Motors. Yesterday they came out with their global sales numbers and they were quite disappointing. So on the back of that, a lot of people in the market have turned negative, and even our technical analysts have turned bearish on the counter. And what they are saying is that with the stop loss of about 238 to 240, the stock could actually come down to somewhere in the range of about 200 to even 180 for positional traders. So from that perspective, Tata Motor put makes sense to buy at around 1 rupee 220 put. Right, Shaival, thanks a lot for that update.
Thank you.
Friends, in terms of news, the other global news is that the IMF has actually cut the overall growth forecast for the global economy from about 3.6 odd percent to 3.5%, and for China they have revised the growth outlook to 8% from 8.2% previously, and even for India they have revised the growth outlook down to about 6.1%. So which is suggesting that overall IMF is also looking at a very low growth for the world economy and for some of the emerging markets. Back home, friends, we had a very disappointing session, and actually though the inflation data came in quite positively at about 7.25 versus the expectations of about 7.6, and the core inflation also came in much lower than what market was looking at. But I think the overriding fear in the minds of the market man is that because of the monsoon deficiency and because of the way we are seeing the food prices shooting up because of the lower monsoon, RBI would take a cautious stance. And we also had an indication from the RBI Governor Subbarao that the RBI is comfortable with the 5% inflation level. So since we are currently at about 7.25, 7.5 with the slightly upside risk potential being higher, there is an increased probability that we may not see a rate cut or a CRR cut in the forthcoming RBI policy. At the same time, we have seen that market to a great extent has discounted a rate cut, which is reflected in the way the bond yields have moved. Bond yields are already quoting at about 8.05 to 8.1%. And they are already down from about 8.4, 8.5 to this level. So market has already factored in that. So there may not be a great surprise if at all we see a rate cut. In terms of company specific news, Tisco has decided to exit the HKS JV, and the stocks has turned ex-dividend, and because of this you might see some positive bias for that. In terms of other news, government has imposed 10% import duty on the sugar, which is positive for some of the companies like Balrampur Chini, Bajaj Hindustan, and to some extent Renuka Sugar also. And we are hearing that a lot of punter based buying has happened in the stock, so there might be some more upside for some of these stocks. Also friends, Axis Bank is likely to report the numbers today, and we've already covered the consensus expectation and the earnings strategy in the other section, so you can just refer to that section for the earnings strategy. And Tata Coffee actually reported a good set of numbers, and the actual net profit was 32 crore versus 13.6 crore last year, so this stock could remain in action today. That's it from all of us, friends. Have a nice trading session. See you tomorrow at the same time.